Global stocks are in free fall as monetary policymakers in the U.S. pledge to keep up their fight against inflation, even if it comes at the expense of economic growth. Losses in Asia have been led by shares in Hong Kong, which have fallen around 2%. That mirrors a steep decline across all major indices on Wall Street overnight. It follows the Federal Reserve's decision to hike interest rates by 75 basis points on Wednesday. The move was expected by most analysts, but central bank officials signaled there would be more hikes to come as long as inflation remains high. Now let's hear from Fed Chairperson Jerome Powell.
We don't know. No one knows whether this process will lead to a recession, or if so, how significant that recession would be. So how do we get rid of inflation? And as I mentioned, it would be nice if there were, a way to just wish it away, but there isn't. We have to get supply and demand back into alignment, and the way we do that is by slowing the economy.
For more on the story, let's go to Danni Hewson, financial analyst at AJ Bell in the UK. Welcome back to the program, Danny. Now, we just heard from Chairperson Jerome Powell there. He's talking about the possibility of a recession. And can you just give us your reaction to what happened last night and why the reaction from the markets was pretty severe?
It was pretty severe, considering that most people had priced in a 75 basis point rise. There had even been speculation that they might go for a full percentage point rise after the Central Bank of Sweden did that earlier in the week. So technically, you might think that markets would have breathed a bit of a sigh of relief. It was the rhetoric that Jay Powell came out with that really focused people's minds. The fact that he said, we can't say whether or not what we're doing at the moment will lead to a recession, but we have to do this. It is going to be painful. We are determined to stay the course, and there are more rate rises to come this year.
Right, so you're talking about the pain there for the U.S. economy, but as we know, the U.S. economy, it's not really in bad shape. Unemployment is low, inflation is a little high, but consumers are still spending, businesses are still investing. How strong is the U.S. economy to absorb this kind of shock?
It's interesting because if you look at a technical definition, the US economy is in recession at the moment. It had 2 quarters of negative GDP growth, and although GDP did rise in July, it's not exactly been firing on all cylinders. The reason that the United States hasn't declared it a recession is because, as you say, the jobs market is incredibly robust. And yes, people are still spending because of it. Wages are rising. And effectively, that is keeping the US economy going at the moment. Jay Powell did say that he expected the United States economy, despite these rate hikes, would still continue to grow, albeit a tiny bit over the rest of this year, about 0.2%, and then around 1% next year. So it is stronger than some economies in terms of being able to stomach these rate hikes, but clearly there's a lot of pain ahead.
All right. Danni Hewson, financial analyst at AJ Bell in the UK. Thank you for joining the program.